Hello, traders. It's 8:02 a.m. Chicago time on Wednesday, the 26th of August, 2020. Please give me a mic check. Tell me if it's running too hot or not. Still tinkering with this new headset and its parameters. Just want to make sure I'm nice and clear and not blowing up your headset or speakers. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. This is episode number 1827 today, and what we are coming into today is really a mixed bag. A mixed bag of positions. I would say allocation is mixed. The S&P is up 1 point. 1 point, and the Nasdaq's up 28, with the leader today being the DAX, which is only up 43 points. That's about 2 or 3 rotations in a DAX, 0.36%. The dollar's up today at $93.30.5, up 28.5 cents, 0.31. The bonds are off again, 31 ticks, almost a handle. They were off yesterday as well. The euro is off. Gold is off $5.80. Gold approaching 1900, trading at $1,917.30. The Russell's down to 2.7 points. And that's where we stand. Really a very, 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 very tight session in terms of what it has done in terms of the value area and in terms of volume. The S&P volume is very low, is extremely low actually, at 136,000. There was really no positioning in the overnight session. It seems like it is in a holding pattern. It's like the day after Antietam here or something, where everybody's just waiting for the smoke to kind of clear the field to see what they're actually aiming at. To me, this is really interesting against the 3450 in the S&P, but we'll get into those details here in a minute. In terms of the calendar coming into today, we had a couple numbers out of Europe, but nothing too significant. Durable goods orders came in at 8:30 Eastern for the U.S. Expecting 3.9%, came in at 11.2. 11.2%, and so that was quite high, pretty good. And then today we're looking for crude oil inventories at 10:30. I'll let you. I'm not going to get into the details of these, and then of course the Jackson Hole Economic Policy Symposium, which will be done, I believe, over Zoom this year or some sort of app. Pretty interesting times we live in. So that's where we stand. Let's switch gears as always and hit the review. It's one thing to come on here and prognosticate about what the market is likely to do. It's another to come back and say what worked, what didn't. The key thing to take away from yesterday is the action was very, very dull. It was almost like we were on holiday, more so today. The key test yesterday on scenario one. So scenario one was looking for a dip down at the 35, was looking for a push to 50, push to 50, and then failure in the afternoon into the close, looking for it to fail down into the close. Yesterday's action stopped right in here. That's about, we got this much out of it. We did not push beyond the 45 basically, and we did so on the close, grinding up on the close. And so it never actually tested 50. We never saw the pullback. I think I was being too ambitious with that scenario yesterday. Here's what actually happened. We opened up in a gap higher. Let me turn off the annotations here. We opened up in a gap higher, and then we basically ground our way back into yesterday's range right here at the 29.5. Consolidated for a little bit, poked down even further, pushed into the almost into this key LVN from the prior day in the 2021 area, the low being 2175. We had a couple pushes yesterday that looked kind of promising. We had this first push, which was the largest upward rotation on the day. At that point, basically setting us up for potential for a higher low and a continuation higher, which did not take place. It ended up reversing that whole move, and it looked like it was really time for it to give up and go down. Not so. Following that, we get this 12.5 point move right here. Back to near highs. But as I cautioned in the Convergent Trading chat room, head trader channel, these runs up, this run up here is not likely to be sustainable. It's not likely to be believed. I did not see the underlying sectors rotating with it, so the expectation is it would pull back again. Again, it did so right here. Expected it to pull back to 28, went to 28.25, and from there it launched into the 34.44 direction of the 34.44, 34.45, which was expected to be the stumbling point in the morning, and that was that. We finished on another neutral extreme day. There was a neutral extreme day on Monday. Yesterday, we had a neutral extreme day, and so we are continuing. That gives us a pretty good probability. When we have a neutral extreme, essentially what the market has done is it comes in and it checks highs and lows, consolidates, and often that is the initial bounce high, the initial bounce low. These are these yellow lines right here, right there. These yellow lines are the first hour's high and low, and then it attempts to go lower, breaking the initial bounce low. When it comes up, consolidates, and pushes through the high. What this is saying is we tested to find buyers. We successfully found buyers, like it did here and here. We successfully found buyers, and now with confidence, we can push higher. And when that happens, generally it continues to go in that direction in the overnight session. Okay, today's session, not too far. It did continue, but not too far. So that's where we left it yesterday. Notice something here. Notice that despite all of the action, and a lot of it was downward sloping in the morning, this channel, even on the break of the channel, we fall back into the channel and then we break the channel again and form a new direction. The delta is not with it at all. Yesterday's delta was very, very weak relative to the price action, and the volume was in the 800s, 893,000 traded in the RTH session. And so this is where we stand. Essentially, the market is non-committal at the moment, and we do have some action tomorrow. We have Fed's chair speaking in the morning tomorrow at 9:10 Eastern. We do have a couple of things to contend with economically, but nothing really major. And so I'm not sure what the market's waiting for. To me, this looks like it's exhausted, and as am I with this rally, but not that that matters. But overall, what we end up with today, and I have to scroll up, what we end up today is 139,000 contracts traded overnight. And we couldn't even get to the prior overnight high, from which we sold yesterday, and we are in a completely Gaussian, completely balanced profile, relatively tight range, very tight value area. The value area from last night is very tight, 41 and a quarter to 45. This thing is wound up pretty good. It did check the 36 below. That's been a key area for a couple days. It did check the 36 below. It could not take out the 50, so the high is 48. The prior high is 48.75, and we are holding in the middle. We have VWAP, we have mid and the point of control within range of each other. Inside of the value area, it's got all the hallmarks of a kind of a flag or a consolidation or coiling or compression, call it what you like. It's got the hallmarks of that, and then we are just now breaking a little bit higher on the session. But overall, there's just not much to talk about today other than to say that the value area has moved up. So we've moved the point of control from down here to up here. That's the black line. We've moved the value area from down here to up here yesterday, and the market is still chugging along, one time framing up, and so the overall balance is on the buy side. The buy side is in control still on many levels. So the overnight inventory is really balanced. The delta is balanced, so looking for chop on the open this morning unless we get a big push before it opens up. I want to take a moment and talk about the composite here. This composite starts in 2015. Again, each one of these boxes represents a week. The color of the box represents alternating months. So this would be July right here in light gray, August in dark gray. And as you can see, the weeklies, I mean, for a while, really, the weeklies have been putting in higher lows, higher low on the weekly. So the bottom of the box keeps rising, and there's just no reason to trade against it. So the short side is always tentative. The short side needs to be light and tight. We're ahead of our 20 period moving average. We're ahead of the monthly VWAP. Actually that started in July. We're ahead of everything, and we are pushing against the highs. And again, we keep making these higher lows on the daily. So on a monthly time frame, we're one time framing up on a monthly, weekly, daily. It's really ramming it to these shorts and the bears who think that we have gone too far, too fast, and the coronavirus should have brought the market down, and blah, 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 yada, 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 right? A lot of the global macro people are really struggling with this. And so to me, just bear in mind the big picture where the big money is. There are some very, very distinct areas here to trade against: the 3400, 3451, the 3351, and so on. You could see some really distinct support resistance. It's almost textbook style lately. In the order flow, looking at the overnight session, of course, very tight. Can you go meow somewhere else, please? The cat just loves to meow while I'm doing my trader bites here from home. So this is what the overnight session looks like. Pretty tight with some oddly shaped high volume areas, high liquidity areas. We could still see, not as bad as yesterday. We could see these prongs in the offer. Not much beneath us. I mean, it's kind of a blank area below. I can light this up a little bit, but as you can see, the real areas to deal with are 3450 and 3455. 34.55 as we push higher. So I'm paying a lot of attention to this 50 area. I mean, it's a pretty thick area based on some measured moves, measured move targets. There's some major moves from below that are projecting to between 34.49 to 34.51. This area has been difficult for the market to push through. It's likely to push through it because why not? It's got everything it needs to be able to do it. There's a little bit of liquidity there, but we're not talking about much. We're talking about 260, 270 contracts, which we can blow through in the S&P pretty quickly. So overall, it's not a clear picture today, folks. It's if you're sitting here going, "Gee, what do I do with this?" Really, I would say, if you were a prop trader trading for me, I would say you'd want to lean lean into the long side because nothing has changed, and keep your shorts tentative. Keep runners on your shorts if you want, but I got to tell you, anything I take short is pretty quick. I'm taking it off the table pretty quickly. The impulses down have not had continuations, so I've been off that trade, and that's how we have to approach the market currently. We're in this 1999 2000 era type of bubble. A lot of the action, a lot of the hype from sports bettors turned traders, from everybody and their mother becoming a guru now, and people hyping up these penny stocks more than ever. I'm seeing exactly the type of thing that got me into trading in '99, and when I became a professional trader in 2000. And in 2000, this is what got me into trading. This kind of hyped up, like, oh my God, look at the market, new all-time highs, and I wanted to participate, and I just made the exact same mistakes. I mean, I remember I ran $25,000 to about $380,000 in maybe 6 months. And you're thinking that's great, but because I didn't know what I was doing and I didn't have any risk control, I ran that 25,000 to 380,000 down to about $1,000, as I held on to Enron, WorldCom, and others because had to buy them cheaper on the dip down. So this is my point is I'm just seeing the same kind of behavior and attitude in the market today. We are currently rallying here. We're pushing, we're grinding. It did this yesterday. We're grinding right into this key area. Up here. We are pushing through yesterday's high here. The delta is picking up. Look at the delta picking up. We could see the delta picking up. So this is changing things a little bit. It's making things a little bit harder to deal with right now. I expect the open is likely to continue to drift. I'm looking for a spike through this 50. I'm looking for a consolidation, an attempt to pull back. We would be in a gap at this point, an attempt to pull back, and then a grind into the next key area that I have, which is a measured move at 57, giving us about 12 points of range or so. That's the primary scenario currently. Again, you got to keep your shorts light and tight. The secondary scenario is an open, consolidates. If it fails up here in the 50, consolidates, pulls back, and the anticipated area to pull back to is the 44, 45. Sit here for a while and then grind its way up through this 50. And again, in the same path as scenario 2. Scenario 3 is the failure of these patterns, and that is the open auction that attempts higher, fails to do so, comes back, tests the overnight point of control in the high volume areas, and then starts to move towards the 36 from yesterday, and then if, from there, who knows? I'm not imagining a huge sell scenario at the moment, but that would be scenario three. The key areas don't, the patterns are really based on where I expect support or resistance to be. But just remember, right now it's 57. This is a measured move, not highly qualified. Measured move, the 50-51 right here is important. We're right up against it, 50-51, 50, 50, 51. And the 45, 36, these are the key areas, the 30, and so on. These are the key areas to watch out for today. I cannot provide more color, and there's not much more I can do with this kind of action. It's really a poor trading action, in my opinion. A market that's grinding directionally, unidirectionally. But this is what we have to deal with. It's really important to just stay patient and wait for areas where you could see that the market's just not able to push as hard as it tries, and then it starts to rotate. Wait for the market to tell you what it wants, as opposed to you anticipating what it wants to do. Okay? I'll catch you tomorrow morning. Good luck, and I'll talk to you later. Take care.